In the heart of Silicon Valley, a technological revolution is unfolding. While the world's attention is fixed on one company's meteoric rise, three giants are quietly positioning themselves for what could be the most significant shift in the tech industry since the birth of the internet. I'm Felix, and what I'm about to share with you isn't just another stock tip or investment idea. It's a glimpse into a future that could redefine wealth creation in the 21st century. But I must warn you, the information I'm about to reveal might challenge everything you know about investing in technology. Three companies, three sleeping giants, each one poised to potentially outperform even the seemingly unstoppable nvidia. But the question is, do you have the foresight to see what Wall Street has overlooked? Even my trusted companion Winston here has been restless, sensing the magnitude of what we've uncovered. And believe me, what's in this brief could change everything you thought you knew about investing in AI. But before I reveal the contents, I need to share something extraordinary with you. Our teaching portfolio, using strategies I'm about to touch on, has skyrocketed over 80% this year. That's right, that's a $24,000 gain on a $30,000 teaching portfolio. And you might be wondering, Felix, is that possible? Can I replicate these results? Well, I never promise results, but what I do promise is to give you the same strategies that I apply for free to you. All you got to do is join our live trading seminar coming up at felixfriends.org/webinar, and I'll give you the 3-step system that Winston and I apply week after week in a couple of hours. Now let's delve into our first contender stock. AMD, which stands for Advanced Micro Devices. While the world has been mesmerized by nvidia, AMD has been quietly starting to build up its own AI empire. And for those who might be not familiar, AMD is a company that designs computer processors and related technology for business and consumer markets. Computer processors, often called the brain of a computer, are responsible for executing instructions and performing calculations. They're crucial for AI applications which require immense computational power. AMD has been innovating in this space, creating processors that are increasingly powerful and efficient. AMD's recent quarterly results are just the tip of the iceberg. They reported revenue growth of 9% year over year, reaching $5.8 billion. Now, for those who might not be familiar with financial terms, year over year means comparing the same quarter this year to the same quarter last year. It's a way of measuring growth over time. But here is what's keeping me up at night. Despite their data center operating income multiplying 5-fold, AMD stock is lagging nvidia by an astounding 120% this year. Let me break that down for you. Operating income is the profit a company makes from its core business operations, excluding things like investment income or interest expenses. And when we say that AMD's data center operating income has multiplied 5-folds, it means it has grown to 5 times what it was before just from data center revenue. That's massive, massive growth. So when we talk about AMD stock lagging nvidia, we mean that while both company stock prices have gone up, actually, no, AMD hasn't gone up at all this year, has it? It's pretty much at zero. nvidia has gone up 120% though. That's a huge difference. This disconnect isn't just an anomaly, a difficult word for an investment banker. This disconnect isn't just an anomaly. It's an opportunity of seismic proportions. In the investment world, when a company's financial performance is improving dramatically, but the stock price isn't reflecting that improvement, it often signals a potential opportunity for the savvy investor. And then we have our stock number 2, and you might say, this is not exactly a hidden gem. Well, hear me out. It is Microsoft, also my biggest holding. You might think you know this tech giant, but trust me, you haven't seen anything yet. Microsoft, a company most people know for Windows and Office software, has been making significant strides in AI. They've been integrating AI capabilities into their existing products and developing new AI-powered services. And it's not just impressive what they've actually done, it's kind of revolutionary. They introduced an AI assistant called Copilot across their Microsoft 365 suite of products. And this isn't just a simple chatbot, it's a sophisticated AI that can help with writing, data analysis, and even coding. But here's the kicker. Despite positioning themselves at the forefront of AI services, their stock is still playing catch up to nvidia. In their most recent quarter, Microsoft reported revenue growth of 15% year over year, reaching a staggering $64 billion. Their operating margin, which is operating income divided by revenue, held steady at an impressive 43%. And what we are particularly excited about, it's the growth of the AI offerings. Microsoft's CEO revealed that their Copilot service is growing faster than any previous generation of software they've launched as part of Microsoft 365. The number of customers with 10,000 or more seats, that's individual user accounts, doubled in just one quarter. And this rapid adoption of AI services is a clear indicator of the direction the tech industry is heading into. And Microsoft is positioning itself to be the leader in this AI-driven world. The potential upside for Microsoft stock, well, it's enough to make even the most seasoned investors weak at the knees. We could be looking at a situation where the market hasn't fully appreciated the potential of Microsoft's AI offerings, the recurring subscription revenue from it, and just creating, therefore, an opportunity for the savvy investor like Winston. But let me talk to you about our third dark horse. That could really change everything. Palantir. Palantir isn't just another tech company. It's a silent powerhouse that's been operating in the shadows, some say, perfecting AI technology that's years, perhaps even decades ahead of the competition. And for those who might not be familiar, Palantir is a company that specializes in big data analytics. They create software that helps organizations process and analyze massive amounts of data, finding patterns and insights that'd be impossible for humans to discover on their own. Their AIP, artificial intelligence platform, isn't just advanced, it's one of a kind. It allows organizations to rapidly build and deploy AI-powered applications with their own data and models. And by rapid, I mean hours. But what does this mean in practical terms? Imagine a retail company wanting to predict future sales trends. Traditionally, this would require a team of data scientists spending months building and training some sort of custom AI model. With Palantir's AIP, the company can use their existing sales data, combine it with Palantir's pre-built AI models, and create a predictive system in the space of a couple of hours. But it gets more interesting than that. Palantir's software isn't a one-time purchase. It's what we call a recurring revenue model. This means that instead of buying the software outright, companies pay a regular fee to use it. This, of course, is true for pretty much every software company nowadays. So it's a subscription service, but for a powerful AI software. And once your company is run by it, are you ever going to cancel it? Are you going to switch to a competitor? Very, very, very unlikely. So the moat is insanely good. And this recurring revenue model could generate cash flow for years, potentially decades to come from every single customer. And we're also seeing that the customers who've been with Palantir the longest keep spending the most because they understand the system, they use more of it, upgrade it, and roll it out to more users. So we're talking about a perpetual money-making machine here. In the world of investing, recurring revenue is highly valued because it provides a steady, predictable income stream, and the numbnuts who call themselves analysts find them very, very easy to model. But here is the bombshell. Despite this incredible potential, Palantir stock has been underperforming nvidia. The market hasn't caught on yet. But when it does, well, the valuation implications are staggering. We could be looking at a company that's not just undervalued, but criminally undervalued. Lock up the analysts, he says. The potential upside isn't just significant, it could be life-changing. To put this in perspective, let's talk about valuation for a moment. In the stock market, a company's valuation isn't just about its current profits, it's also about its potential for future growth and profitability. Investors often use metrics like price-to-earnings ratio to assess whether a stock is overvalued or undervalued, and this ratio compares a company's stock price to its earnings per share. A high PE ratio might suggest that a stock is overvalued, while a low PE ratio might indicate that it's undervalued. In Palantir's case, their current valuation doesn't seem to fully account for the potential of their AI platform and their recurring revenue, perhaps perpetual revenue model. And this disconnect between the company's potential and its current stock price could represent a significant opportunity for investors to recognize it early and have a long enough time horizon. Now, I know what you're thinking, Felix, it just sounds too good to be true. And you're right to be skeptical. In the world of investing, something that sounds too good to be true, it often is. That's why it's crucial to do your own research and understand the risks involved. But remember, the biggest opportunities in the stock market often look impossible until they become inevitable. Think about companies like Amazon or Netflix. There was a time when the idea of these companies dominating their respective industries seemed far-fetched. Yet here we are. The real question is, will you be positioned to benefit when the market finally catches up to reality, or will you be left wondering what could have been? That's why I'm extending this invitation one last time. Join me for our exclusive webinar where we'll dive deep into strategies. We'll explore exit rules, automations, how to take profits, when to enter trades. And with the right knowledge and the tools, you can make better informed decisions and potentially maximize your returns while minimizing your risks. So head over to felixprehn.org/webinar, secure your free spot, and remember, in the world of investing, skills and knowledge is power. And the more you know, the better trained you are, the better positioned you'll be to make informed decisions about your financial future and financial freedom. I'll see you at the webinar. Together, we'll explore strategies, set up some real trades, and you can be a complete beginner. And I'll break it all down for you. Link is down below in the description. I thank you for watching. I thank you for tuning in. Unprecedented gains in your portfolio. Imagine doubling your investments in just 6